Hey everybody, it's Doug Schauf with Remax Oceanside to make Maine your home.com. Whether you're watching or listening to the podcast, please subscribe to the channel and make sure you hit the little bell so you get notified when new episodes come out. In this week's episode, I sit down with Jason Straetz with Gorham Savings Bank, and of course, when I say sit down, I mean we had a Zoom meeting. Before I get too far into that, though, I just want to say to everybody, I really hope you're staying safe, staying healthy out there. My thoughts and prayers are with everybody that's been affected by the coronavirus, whether it's health or economic. It's an interesting time right now. And the reason I had Jason Straetz come on here was to talk about the CARES Act that the federal government just passed. And in particular, we're going to talk about the Paycheck Protection Plan. It's basically a grant. It's a loan that's forgivable, but he has some great knowledge about it and is able to shine some light on it. So let's do this. All right, so guys, I'm here with Jason Straetz with Gorham Savings Bank, and he is in the commercial lending side. And I thought it would be great, once again, to kind of talk about the CARES Act and in particular the payroll protection piece of that. And, Jason, I hope you're going to be able to shine some good light on this whole topic. But hey, before we jump into that, real quick, let's learn a little bit more about you. So, first off, where are you from? Let's start at the beginning.
Yeah. Well, I grew up in northern Maine in Aroostook County, Presque Isle.
Yep.
Originally from Wisconsin, actually, but I've lived in the southern Maine area since I graduated college, which was 18 years ago.
Okay.
And since that time, I actually live in Saco. And since that time that I graduated from college, I've worked for the same place, which is kind of a rarity these days. So I've been with Gorham Savings Bank for 18 years, and the majority of that time has been in the business banking, commercial lending area, and I've been an active lender for the past few years. Actually, a commercial lender for the past few years. But yeah, so that's kind of yep. And I've worked in the branches before that.
Yeah, you've been doing this a while, so yeah, you kind of got your finger on the pulse of what's happening with small business and stuff, huh?
Yeah, sure.
Yeah, excellent. Well, I thought we'd jump right in, and kind of get chatting about this because I'm sure there's a lot to go through, and we don't want this to be a 2-hour thing, although it could be. So the CARES Act. And what we're going to talk about mostly is the payroll protection part of that. So now rolling into, I know a lot of small business guys, as I'm sure you do too. A lot of my friends own small businesses, and a lot of them are struggling real bad. And so from what I understand, like a lot of this payroll protection loans and stuff like that, a lot of it's forgivable. They're almost like grants in themselves. Why don't you give me kind of like the general overview and maybe a few specifics on how it all works?
Yeah, sure. And yeah, you described it correctly. I mean, in my opinion, and this is an opinion, they're mainly just they're really a grant that the SBA is using banks as agents for, in a sense.
Okay.
And because the vast majority of it will be forgivable, and then the loan itself, if there is any portion that isn't forgiven, the loan itself is only 0.5% interest, which obviously I don't think any consumers out there have ever really seen such a thing. But yeah, so
that's it. Oh, so if you happen to get stuck with a little bit left, it's very little interest.
It is, yeah. It would be a 2-year maturity, a 2-year loan at that point, but the interest that accrues on it only accrues at 0.5%. Yeah.
Interesting. Okay, great. All right.
So but the program, but the goal would be to get as much forgiven as you can, because the program is based on your average monthly. The loan amount is based on your average monthly payroll for the past 12 months for 2019 times multiplied by 2.5. So whatever let's say your payroll is let's say it's $120,000. This is just an example, of course. Let's go 1.2 million for 2019. You divide that by 12, you have 100,000. Multiply that by 2.5, you have a loan amount that's 250,000. Now the forgivable part, it's a little bit different. So the forgivable part, how that works is there's qualified expenses the 8 weeks after you get the loan that can count towards the forgivable part, and that is your payroll. But you have 8 weeks versus 2.5 months, so there could be a gap there, right? Okay. So you have your payroll, but then you could also include your rent, and you can include rent, utilities, and then if you don't rent and you own a building, you can include the interest that you pay on the mortgage for that building. Okay. So
those are the things that are forgivable. Like, okay. So you just have to show that you use the money for that.
That's correct. Yep, okay. Exactly. And so, and to show that, of course, you would show whatever documentation that would be evidence of that, whether it be, your payroll, your payroll records. For rent, it could be a canceled check or an automatic transfer along with your rental agreement, and your utilities would just literally be your CMP bills and the canceled checks. The canceled checks that correspond with that. So, yeah.
So it sounds like if you're careful and like have good accounting and keep track of it, I mean, you can get like this whole thing forgived. Is that right?
Yeah, correct. I mean, that's the point. Yeah. The point is that any loan that you get should be forgiven. Now, there might be different circumstances that arise that keep you that have you have a residual balance. But in general, even in those cases, it's probably going to be a small portion of the actual loan.
Right. So you can carry it if needed. Now, here's a question that I've had a few people ask me about, and not sure if you know the answer or not. I'm hoping you do. So let's say an owner is on payroll. You know what I mean? Like, an owner is being paid through payroll. Can that money still be used for that? Like, let's say it's a small company. They only got like 2 employees. One of them is the owner, can they still use that and have it be forgivable even though they're paying themselves?
Yes, they can. So the biggest thing with that, or for the easiest, so far, the easiest entity to work with on this would be S Corps. So just take an S Corp, for example. Any wages get included in that. Okay. So I should kind of preface all my comments with that banks, as of today's date, which is April 2nd, we still haven't gotten official guidance on everything. So we're operating based on, the application and the law and the bill itself. Right. And one of the things I wanted to point out is that there are certain entities like partnerships and sole proprietorships where it's a little bit different because you don't actually have W-2 wages. Right. But the general answer is yes. Wages to any shareholders can be included. It gets a little bit more tricky with a partnership and a sole proprietorship, and in those cases, I've been advising customers to speak to their accountant or an attorney about that for some specifics until we get further guidance, which may clear that up, but the guidance might not. It might still be a little bit ambiguous there as well. I'm hopeful it clears it up. But yeah, so short answer is yes, and the long answer I just gave you.
Sounds like, if I'm understanding it right, it kind of just sounds on like proving it. If you're a sole proprietor or partnership, just having the right accounting to show that it went to wages, which I understand is the hard part.
Yeah. That's correct. Yeah, that's correct.
Okay. Now, before we jumped on here, you sent me a couple links to some documents, and I'm going to share this. I'll put them in the comments and all that kind of stuff. And we got talking about the application process on this. So, if you guys out there are watching this or listening to this, check the comments. I'm going to put some documents in there. I'll have my video guy flash them on the screen for us. But let's talk about a couple of things that we have here. I guess the first document is kind of like a good overview of what's happening with it. And then the second one is the application process. And then the third, I don't remember what the third one is, but let's talk about what we're going to be able to supply with these people.
Yeah, sure. So, I mean, a couple of the documents are just kind of almost frequently asked questions, or just some general guidelines that a lot of the stuff we just talked about, just so people have a general understanding of what the program is.
Yeah.
And that sort of thing. You know, the application is another document, and that's a good one to look at for everybody, because really that's the biggest this is going to be one of the easiest loans that anybody ever applies for, because you don't have to provide the bank is not going to underwrite this. There's no underwriting whatsoever. So we're not looking at income. There's no personal guarantee. There's no collateral or anything.
There's nothing on it. It's literally just showing your payroll.
Exactly.
No credit score, no nothing, none of that stuff.
No, nothing. No credit pull, nothing like that. So the application, as you can see, just has details as far as you have to answer certain questions. It's really important that if it asks for initials, you need to initial those locations. If it asks for an addendum, for example, it'll say, do you own any other businesses? You just have to make sure you explain that under a separate sheet. So it's important to be detailed on the application, but really the application is just about filling it out and then coming to a payroll figure, that 2.5 times average monthly payroll, and then providing the documents to substantiate that number. So that would be your quarterly 941s. That could be your quarterly 941s that you submit to the IRS for withholdings. And then also included in average payroll would be any health insurance contributions that you made for employees, or 401k contributions. So in those cases, you would just provide the documentation that supports that. So that could be, the bill that you paid for the health insurance, and that sort of a thing. But really, that's it. It's just this document, and the document is not difficult in any way, shape, or form.
No, it looks very easy. Yeah.
Yeah. Yeah.
Okay.
So yeah, I mean, the big thing again, initial where you're supposed to. I haven't tested it yet, but I'm advising people to. I've had a few applications come in already of people that have just put electronic initials on there. I'm telling everybody to handwrite those initials in there, just to be safe, because what you don't want to have happen is have this sent to the SBA, everything seems good, and then have it get kicked back for additional information or additional documentation.
Right. So geez, man, this stuff is great information. Something that just popped in my head to think about, is like your role in all of this is, can anybody come to you and talk to you about this, or should they go to their regular bank, or, where would we point them to? I mean, obviously you're here and I'd like to have everybody call you, but
Yeah.
How does that work? What's the best course of action there?
Yeah. So, I mean, it's be the only time in my life that I think I say this, that it's not something that I would, want to have people refer other businesses to me, because the level of volume is it's going to be very difficult. So us as a bank, for example, we prioritize, customers first, and then on an exception basis, we could consider non-customers that in the area, for people that are in the market area and that sort of a thing. But really, what people are going to want to do is go to their local bank, or go to the bank that they have either a loan through or their deposit account through, and that's going to be your best bet. They should have processes. Now, I will say a little bit, or I will add that I'm happy to talk to anybody, and we're happy to talk to anybody. And especially in the case of if there is a bank out there, and I'm not sure yet, if there is a bank out there that isn't wanting to go through this, they don't want to do the processing on these. In that case, we have a process. We have one person at my bank that's kind of handling non-customers. It's just that unfortunately at this point the priority is our existing customers. So we'll get to those maybe a little bit down the line. But yeah, definitely just call your whatever bank that you use for your deposit account. If you have a contact there, contact them directly. If not, try a branch number and call them, because all the banks have heard about this. Every employee in every bank knows about this at this point. So
yeah, you guys are going to be busy over the next few weeks for sure. It sounds like.
So
I think those are really all the questions that have been coming my way, and some things in my own head as a small business owner. Is there anything else that you can think about that might be important to add?
Yeah, no, not too much, but I will add, actually, I should say yes. I will add that, so for the application part, you just need the payroll records, and then just make sure to have an understanding of the program and the forgiveness part. So just keep documentation along the way for the back end. It'll make things much easier for when you do ask for forgiveness. And I apologize if we had kind of repeated that, but it's twofold. It's the application amount, which is based just on the payroll, and then the forgiveness amount where you have to include those other expenses. So just be as detailed on that as you possibly can, and it's going to make your life a lot easier as a business owner.
Yeah, makes sense. Good record keeping, good accounting will save the day, and be careful with it. Well, hey man, I really appreciate you coming on here and chatting with me. I really do. Thanks for taking the time. You of course stay safe and healthy out there. And I'll put if you don't mind, I'll put at least your email down in the comments. So if somebody wants to, ask you some questions, hopefully that'll be okay with you. And
that sounds great, Doug. Yeah.
And hey, thanks a lot. Hey, we'll do a virtual handshake. How's that?
Yeah. They do the elbow bumps now.
Right. All right. Well, hey, hopefully this was helpful for all you guys. Reach out to Jason if you have any questions. And remember, if you're going to make Maine your home, you don't have to do it alone. Hey everyone, thank you for watching or listening to the Make Maine Your Home podcast. If you enjoyed it, please be sure to subscribe to it, hit the little bell so you get notified when new episodes come on, and share it via Facebook, Instagram, Twitter, YouTube, or wherever you hang out. And be sure to check out my website at makemaneyourhome.com, and of course my YouTube channel at youtube.com/makemaneyourhome. And as always, remember, if you're going to make Maine your home, you don't have to do it alone.